Good morning, everyone. It's 1400 CET. Welcome to Bank Millennium second quarter / first half 23 results call. With us, we have our usual presenters, Mr. João Brás, our CEO and Chairman of the Board, and Mr. Fernando Bicho, Deputy Chairman of the Board and our CFO. First, Mr. Bicho will do a brief presentation of the results, and then obviously we'll be available for questions. Thank you very much. Over to you, Fernando.
Thank you. Good afternoon. And once again, thank you very much for attending this meeting and for your interest. As usual, we will go through first the financial performance of the bank and then through the business results. So we start with a reference to pages 5 and 6, which shows some key figures about the P&L and business activity of the bank in the second quarter and first half 2023. From the page 5, we would highlight the very positive performance in terms of net interest income during the quarter, which increased by 6% versus the previous quarter, and for the first half of the year, 21% versus 1 year ago, while at the same time fee and commission income stayed flat versus the previous quarter, and costs dropped due to the absence of regulatory charges, namely from contributions to the Banking Guarantee Fund, Resolution Fund in this case. We also benefited in this quarter from lower cost of credit risk, and although we had to make still substantial amount of provisions for FX mortgage legal risk, we ended up with a positive result of 106 million zlotys in the second quarter and an accumulated net profit for the first half of the year of 358 million zlotys. In terms of, on the page 6, we would highlight the continuation of the solid growth of active customers and digital customers, and regarding the first one, we are approaching the threshold of 3 million active customers in retail. Also for the solid performance in terms of deposits, particularly deposits from individuals, and on the other side, a drop in the loan portfolio, to a large extent driven by the drop of the FX mortgage loan portfolio, but also to some drop in loans to companies. And last but not the least, we continued to improve the capital ratios of the bank, increasing the surplus over the minimum regulatory requirements, and we will illustrate this later in this presentation. On page 7, so apart from the significant improvement in the results of the bank, we had the third consecutive quarter of positive result, and this represents on an adjusted basis a growth of 53% year on year. We benefited from the growth of NII by 21% year on year during the semester, and the improvement of the net interest margin by 57 basis points year on year. As a consequence, the reported ROE stood at 12.4% and 22.7% on an adjusted basis, and the adjusted cost to income stood at 29%, while the NPL ratio was at 4.5%. On pages 8 and 9, we illustrate the status of implementation of the 3-year strategy for the years 2022-2024, and we can say that we are on the right track to achieve the strategic objectives in the different fronts, starting with the increase in the number of active customers in retail, which, as I said before, is approaching the 3 million threshold, which we were targeting for the end of 2024. So we are on track to achieve it quite before this moment. Also, the share of active clients the active digital clients is increasing, and it's already at 89%. And also, we have an increased share of digital in sales in the first half of 23, already at almost 75%. Regarding financial targets, regarding the target of annual profit level, excluding extraordinary charges, we are already in the end of the first half of the year with 1.4 billion zlotys, when we had a target for the full year 2024 of 2 billion. And the cost-to-income ratio, of course, is significantly lower, also in a higher interest rate environment, and in the first half of the year was at 29%. And the return on equity, I already mentioned, with 22.7% on an adjusted basis. Regarding the credit quality, the quality of the portfolio remains strong, with the NPL ratio at 4.5%, and we continue to decrease the share of FX mortgage in total loans. In this page, we are showing the share in total gross loans, so without deducting the provisions for legal risk that are already allocated to the loan portfolio. Otherwise, of course, the share is much smaller. On page 9, we also illustrate some of the achievements and delivered initiatives, including the significant number of settlements that were done from the very beginning until now with FX mortgage customers, almost 20,000 since we started this effort. Also 400,000 newly opened current accounts from our Millennium 360 offer, and the reduction of our own greenhouse gas emissions by nearly 60% at the end of 22 compared to 2020. We also will highlight the strategic partnership established with Europa insurance company that was announced in the first quarter, and a number of other initiatives, namely recently the new mobile application for corporate clients based on modern mobile technologies, and also the implementation of voice spot technology in contact center. And we have a number of projects which have already started or are being rolled out, including the transformation of the sales and service model for affluent and micro-business clients, combining digital channels with remote advisors' expertise, the transformation of the branch network and the expansion of automatic cash service format, and also the support for corporate clients in the green transformation. Going now through the details of the results of the bank in the first half and second quarter. So the key points are a third consecutive quarter of positive results, 106 million, with a net profit excluding extraordinary items of 776 million in the second quarter, which means a 16% growth quarter on quarter and 69% growth year on year. On the left side of this page, we break down the net results of the bank, segregating the extraordinary one-offs, including FX related and others, in order to be able to illustrate the significant progress that we have been making in step by step in terms of improving the capacity of organic generation of results. Going into more details on page 11, of course, the major driver of the improvement on the revenue side is net interest income, which grew 6% quarter on quarter and 21% year on year. This is, we have to say, even above our expectation when we had our meeting 3 months ago. This was achieved through a combination of still some increase in the average yield on the loan portfolio, while at the same time we had already reduction of the average cost of deposits during this quarter, by 16 basis points to 2.75%. As a consequence, we had a substantial improvement and rebound in the net interest margin to 4.85%, so an improvement of 27 basis points during the quarter. On the fee and commission income, nothing new. The fee and commission income was flat versus just 1% up versus the previous quarter, 5% down versus the homologous quarter of last year. And here we don't have major drivers of change. We have, although, because on one side we have lower fee and commission income from loans due to more limited lending activity, while on the other side the transactional fees have been increasing. And also we see some improvement coming up from the higher volume of assets under management. On page 12 and moving to costs, of course the picture looks good because overall we had a decrease of operating costs by 17% year on year, although if we take out the costs connected with Banking Guarantee Fund and the extraordinary event of 1 year ago of contribution to the institutional protection scheme, of course we had overall growth of operating costs by 15%. Still, the performance in the second quarter was better than the first quarter, as we did not have the contribution to the resolution fund that was booked in the first quarter, and even we had some release because the amount initially booked was actually higher than the final contribution that was done. The process of optimization of the branch network is still going on, although with small adjustments, and also a small drop in the number of employees took place in the second quarter. Moving to asset quality, it continues to be very resilient. And we would highlight in this quarter, first of all, that the cost of risk was significantly lower than in the previous quarter, with a total amount of provisions of 52 million zlotys, and this brought the average cost of risk for the first half of the year to 45 basis points over total loans. We benefited also from the positive impact of a sale of NPLs with a pre-tax impact of 36 million. And this performance of the portfolio plus this sale also supported the, again, improvement of the NPL ratio to 4.5% in the end of the second quarter. Regarding liquidity and capital on page 14, so starting with liquidity, of course, a very strong liquidity position, even strengthened during the second quarter with an LCR of 260% and loan-to-deposit ratio of 74%, and with a ratio of debt securities over total assets of 25%. Regarding capital ratios, we had another improvement in the level of the Tier 1 and total capital ratio. So at the end of June, Tier 1 ratio was at 11.7%, which means a surplus of 1.5 percentage point over the minimum regulatory requirement, and total capital adequacy ratio was at 14.8%, a surplus of 2.1 percentage points over the minimum regulatory requirement. So from this perspective, we continue to execute what we have said to the market in recent quarters. We continue to be focused on the strengthening of the capital ratios of the bank. You see from the graph the significant improvement that we were able to achieve during the last 9 months after the shock of the credit holidays. And I should add that in July, the capital ratios will further improve due to the fact that in the meantime we have concluded another synthetic securitization of leasing receivables, which will further improve capital ratios by around 45 to 50 basis points. Regarding MREL, the improvement in the results and capital position of the bank also supports the reduction of the levels that need to be done in order to achieve the MREL requirements. And we are in a situation where the interim MREL requirement without CBR has been already met, while the other one is still to be met. And of course, we will be developing further actions in order to achieve the ultimate goal set for the 31st of December this year until the end of the year. Moving now to the FX mortgage portfolio. So first, in terms of the numbers of the quarter, we had an inflow of new court cases of 1,525, as you can see on page 16, which is lower by almost 200 versus the inflow of the first quarter. And on the other side, we have signed 924 settlements with customers, an increase versus the 806 of the previous quarter. And the cost was very similar to the previous quarter. We ended up creating in the second quarter an amount of provisions of 715 million zlotys over the portfolio originated by Bank Millennium, so a little bit slight higher number than the one preliminarily disclosed in our current report of 16th of June. As a consequence of these provisions and further utilization of provisions, the current stock of provisions for FX mortgage legal risk represents around 65% of the total outstanding. And then later in the Q&A probably we will address some more questions regarding the recent trends, but this is the most important information regarding the FX mortgage portfolio. As you probably saw, or you can see, we are also providing additional disclosure in our first half report that was also today released. Moving now to the second part of the presentation regarding business highlights of the first half of 2023. We would stress the good performance of customer deposits that grew 5% year on year, and especially the growth of retail deposits that have grown 10% year on year. And I would say that this is especially good, taking into consideration that at the same time we managed to decrease the average cost of the deposits during the second quarter. Also very good in the second quarter and first half of the year has been the sales of cash loans, which grew 25% year on year. And also, apart from the number of active customers that I already mentioned before, also the growth of 172,000 cards year on year. On page 19, going now through the loan portfolio, of course, we had a decrease in the overall loan portfolio on net basis of 7% year on year, or 2% if we exclude FX mortgage loans. And this is especially the reflection of a significant slowdown in mortgage lending during the last 2 quarters on one side, and on the other side also some decrease in the corporate loans as we have been actively managing the risk-weighted assets. Regarding the deposits, as I mentioned before, solid performance, and in the second quarter with relevant growth in terms of retail deposits, which also had as a consequence that we were not very aggressive in quoting deposits from companies, and as a consequence there was some drop versus the previous quarter. The structure of the loan portfolio continues to show the dilution of the FX mortgage loan portfolio, which represented 5.5% of total gross loans, already being deducted by the allocated provisions for the legal risk. And last but not the least, we also see improvement in terms of investment products, where we see already a growth year on year of 7%, also benefiting from more favorable market conditions. On page 20, we show more details about the numbers of retail business. The most important is the growth of consumer loans, which on the back of the strong sales that we have achieved during this first half of the year. So we have a growth of the overall portfolio, of the gross loan portfolio, by 3% year on year, while there was a drop of PLN mortgages by 1% year on year. So without FX mortgage loan, the portfolio, the retail loan portfolio was flat year on year. And regarding the sales, apart from the sales of cash loans that I already mentioned, that reached 1.64 billion in the second quarter, the sales of mortgage loans were slightly higher than the first quarter by 7%, but in the first half of the year, 55% lower. Although, still with these numbers, we achieved a 10% market share in new mortgage origination and 10.8% market share in cash loan new sales. Retail customer funds grew 10% year on year. Of course, during these 12 months with some higher growth of term deposits due to the higher level of interest rates, although there is some tendency to slow down this process. On page 21, regarding the number of accounts and customers, apart from the numbers that I already mentioned, we would also highlight the solid growth of micro business customers and the growth of 175,000 of current accounts. On page 22, the success of the banking digital is shown by the 2.62 million active digital users, a growth of 8% year on year, the 2.37 million active mobile users, a growth of 13% year on year, and the 1.7 million BLIK users in the first half of 2023, a growth of 22% year on year. The numbers of digital sales are also very strong, as you can see on page 23. We had 81% digital share in cash loan sales in the first half of the year, and a growth of 18% in the number of cash loans disbursed online in this first half versus last year. We had a 41% share, digital share in current accounts acquisition in the first half of the year, and a growth in the number of accounts opened online by 21%. And term deposits traditionally always numbers higher than 90% in terms of the share in total deposits. On page 24, illustration of the new features that continue to be introduced for retail customers in order to ensure convenient and secure solutions for daily banking. We have been continuing to expand the use of biometrics in the mobile app. We also have now the possibility of having online disbursement of a mortgage loan. And we also have improvements in the search engine and new BLIK services introduced. And in terms of Goody platform on page 25, we have more than doubled the number of acquired cashback users year on year, and a PLN 2 billion turnover exceeded in the Goody cashback service with more than 40 million zlotys cashback paid to customers. On page 26, and moving now to the corporate business, of course, the lending activity was somehow more limited in recent quarters due to the effort of optimization of risk-weighted assets, and so the bank has been focusing more on small and medium-sized companies than on large tickets. And as a consequence, we had a decrease of the gross loan portfolio by 8% year on year, but at the same time showing improvement in transaction activity. At the same time, deposits from companies are, of course, largely dependent on pricing, And so we have, in the second quarter, in fact, not been too much aggressive in terms of pricing, and so we had some small drop in terms of overall deposits from companies due to the very tight price management. But we still keep a very good balance between current accounts and time deposits. In terms of the businesses of companies and also transactions, on page 27, we see that leasing sales were slightly better than in the previous quarter by 4%, although overall they still dropped 10% year on year, and factoring turnover was flat versus the previous quarter. We see clear increase in the volume of FX transactions by 10% quarter on quarter and year on year. And we continue also to offer a number of solutions and different programs for the companies, also in cooperation with BGK, and at the same time investing also in the digitalization of the corporate business, and this is very visible on page 28. We launched in May a new mobile app for companies. The number of activations has been at an average of 400 per week. This application was extensively tested, and we also drew on the experience that was gathered for the development of the mobile app for individual clients. And so we have this new platform where we put a lot of hope in terms of potential for customers' activization and creating stable relationships with them, and promoting, of course, the corporate banking products and services. On page 29, we also illustrate the support that we are giving to our customers in the green transformation and digital solutions, with things such as ecological loan, a technological loan, loans for financing photovoltaic projects, and also the development of digital customer service and access to a larger CDM network. And so this shows that although some temporary restrictions in terms of overall lending growth in corporate, we have not stopped the process of investment in new solutions for our customers that we believe will also support in the future our further growth in this segment. So this ends the presentation of our first half year results.